Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully all you guys had a very good day of trading today. And in today's markets, guys, another volatile session in the books, which started off as a very red morning after we got a less than favorable manufacturing report, quickly turned around into the green as traders were able to price in the damages on the manufacturing sector and kind of bid up a little bit of a rally before tomorrow's April 2nd tariff deadline. Now, President Trump did come out today at the end of the day saying that he will only release the schedule and the amount of the tariffs come 4 p.m. Eastern, which would be after the market closed tomorrow. So any notable price action will most likely be had in the after hours of tomorrow's trading into the Thursday session. So the Thursday session now turning probably into the most volatile session of the week. So in today's video, guys, we're going to do a few things together. Number one, go over the key notes in that manufacturing report, see exactly what happened to leave the markets starting off at a fairly red pace this morning. Thereafter, we're going to go through our major technical analysis of our major stock market indexes, followed by our big tech names. See, even though big tech had a very good day today, are they in daily uptrends right now? Still in daily downtrends? How should we possibly be bidding these tech stocks if indeed it is part of your wheelhouse? And lastly, I'll round it up with a couple of swing trades that I've been eyeing very recently and positioning into myself. So it should be a very fun video and shorter than usual. Let's dive right into it, shall we? So the SPY up a very cool 0.28%. The Qs 0.81%. Now it was a very bumpy day overall, guys. Starting off the morning, kind of red, right? Very red start to the morning. The bulls got a nice little jump, pull back in the afternoon, and then a strong close. So these days, we know we've been used to it the past month and a half. Very volatile, but at least the bulls able to, kick it up a gear into the end of the day and closing above the highs of yesterday. Take a look at the heat map right here. The heat map overall did paint a fairly broad picture, except for healthcare, which was really dragging down the S&P today. But financials not doing too bad. Big tech and software as a service also not doing too bad. Defensives, utilities, industrials, and energy also having a very decent day. So I would say that the market rotation was more broad than not over the course of today's action. Moving into the one-day relative performance, you can see that even better, only one major sector was left behind, and that was healthcare, coming down almost 2% from the highs of yesterday. Not a very good day for that sector overall. Eli Lilly was a big pain point. Eli Lilly and Johnson & Johnson coming down 7.6% overall, contributing to that negativity. On the 1 week, where do we stand leading into the tariff date of tomorrow, guys? Well, it's fairly mixed. You got the defensive sectors that are really pulling ahead right now. Defensives, utilities, energy, and real estate, and everything down except, well, mostly the things that are down the worst are technology, communication services, and consumer cyclical, right? Consumer cyclical because of the worries about a possible recession because of the current economic policies, and technology because we've known there's been a bit of a growth scare in the markets recently, and people have been flocking to value as part of that broad rotation from growth to value overall. So before we continue on to the more of technicals right now, let us dive into that manufacturing report that came in hot this morning off the press. Yeah, so take a look at this. Manufacturing PMI coming in at a 49. I'll remind you, anything above a 42.3 does show that the economy is still in an expansionary phase, but you do want to see this higher than lower, of course, right? And out of the last 2 years, guys, I mean, manufacturing since the highs of 2022 has been contracting, still not in recessionary territory. That will be contractions below the 42 mark, as we saw during the Great Financial Crisis, and very briefly during the COVID years as well. So it's near the historical lows and has been curling down, but you can see over the past 2 years, we have had worse reads. Now, the reason we look at manufacturing, guys, is because there's a lot of things that are starting to get priced in, and we want to hear in terms of the business manager's perspective as to, whoops, my chair came undone there, my bad, leaning back a little bit too much. So we want to see, I'm not going to edit that out, guys, we're just going to roll through, yeah? We want to see the business manager's perspectives on what is the expectation now for tariffs. Are people nervous? Are people building up inventory? Well, let's have a look here, shall we? Other than that, I mean, before we jump into that, Joel Schaub's openings coming in slightly under the expectation, but I wouldn't say there's much of a problem right there, not missing by too much. This is the most important part of the entire manufacturing report to make it make sense overall and why the markets reacted negatively to it, even though it wasn't far off the expectation in terms of the headline number. The commentary is really what seems to be problematic for today's markets, yeah? So let's dive into it real quick. So we're going to hear from a number of different industries here. Chemical products, transportation, food, beverage, and tobacco, machinery, I'll just read you the quotes, and you guys can obviously understand the tone here of the manufacturing sector. Now, in terms of chemical products, complex markets saw a surge in volume buying in anticipation of 2025 being slightly better than 2024. In March, however, all markets saw a slowdown, with fear and inventory stocking to hold through a potential crisis. That's chemical products. Moving on further, now in terms of transportation equipment, acute shortages continue to impact supply chain continuity. Chinese restrictions on critical minerals, such as germanium, have caused major shortages, resulting in all supply needed in 2025 already assumed, and not surprisingly, significant price increases as a result. That is China's response to the first round of tariffs imposed by President Trump roughly a month ago, where they were very calculated in which things they chose to reciprocate on. It was in terms of critical minerals, largely of which China is a major supplier worldwide, but they control almost 60 to 70% of the supply of several critical minerals that are in the manufacturing process, especially for electronics and advanced equipment and machinery and stuff like that, right? Raw minerals. That's what China is playing hardball with on their end. That's transportation sector. Food, beverage, and tobacco. The next one for this is consumer electronics. Customers are pulling in orders due to anxiety about continued tariffs and pricing pressures. So they're pulling forward orders. That's why we're seeing some spike in those retail sales of electronics, because it stands to argue if you think you're going to pay more later because of tariffs, you may as well buy it now. That's computer and electronic products. Now, food, beverage, and tobacco. Starting to see slower than normal sales in Canada, and concerns of Canadians boycotting U.S. products could become a reality. So there it is, guys, food, beverage, and tobacco. Now, machinery. Business conditions are deteriorating at a fast pace. Tariffs and economic uncertainty are making the current business environment challenging. That is machinery. Moving on, fabricated metal products. Think about those steel and aluminum tariffs. New order levels have increased and are better than expected. We suspect that our customers are trying to build inventory at current prices to get ahead of expected tariff and related cost increases. We expect this surge in demand to be short-lived. So it stands to argue, right? Are they going to have sustained demand in the future? Is the United States going to be able to bring back onshore manufacturing of a lot of its steel and aluminum businesses? We will see. But so far, right, a buildup in inventory, which is leading to an increase in prices because of that higher demand, of course. Now, miscellaneous manufacturing. Newly implemented tariffs are significantly impacting gross profits. Canada's new tariffs on U.S. goods are significantly impacting orders from that country. Quotes and sales are lower from Europe due to the threat of retaliatory tariffs. Miscellaneous manufacturing, that is a very big one, guys. You can see there's a slowdown occurring right now, yeah? That data will only be reflected the next few months worth of hard data releases, but you want to see the commentary from the business leaders in the manufacturing various different sectors. And now lastly, primary metals. Bearish market sentiment and tariff applications and costs have dominated discussions over the past month and should continue to dominate markets until a clear path forward is determined. Overall concern is whether or not demand destruction will occur with higher pricing, right? Meaning that if prices are higher, is demand just going to vanish? Is it going to be repositioned elsewhere? All of these things we have to very closely monitor, because these are the first little signs of the manufacturing slowdown or supply chain repositioning, guys. This can turn into hard data slowdown, but only in due time in the next 3 to 6 months. So we'll pay special attention to all of the manufacturing reports moving forward, and of course, the economic output as a result of these constantly changing, demand and supply curves that the market is facing right now. Now let's look at some charts and dive into the technical analysis, shall we? So in terms of the SPY, I figured I should put the expected moves for the week, guys. The expected move on the SPY is 1.8% from now to the week end. Top end of the move would be just above the 200-day moving average. The bottom end of the move, this other yellow line, would be right at the lows. You can see the market can move in a decent fashion. After today's price action, we didn't really change much. We are still underway with our daily bounce. However, we know that the bulls had lost the daily uptrend, the bears flushed. Now they are looking for a lower high into a lower low. Now the size of this bounce is not too bad. Measure the size of the bounce, 50% retracement size. So the bulls have a chance at trying to recapture a new daily uptrend. However, if we get shut down tomorrow and the subsequent Thursday with tariffs, guys, do not be surprised if we roll over. In the event that we continue pushing higher, let's say, the 200 EMA will act as resistance, 570. Above that, same area as we had before, 575 to 585. To the downside, however, if we complete this weekly downtrend follow through, you're coming down here, 530 down to about 500 is the next big stop for the SPY, and that will be a top to bottom decline of anywhere between 13 and 17.5%. So not looking too bad as of right now. The bulls are maintaining control, but as I've said, this week is going to be extremely volatile. Tons of macro catalysts, not only the tariffs, tomorrow jobs, and then Friday, more and more jobs, non-farm payrolls, and the infamous unemployment rate as well. So it should be a very volatile week. Very tough to call how this one will play out. We will pay special attention to who can either continue their trend, or if the bulls recapture, then we can once again talk about the bulls' ability to reset maybe into some weekly uptrends. Not enough data to call it as it is just yet. Moving on to QQQs right now, same concept, up about 0.81%. The bounce is underway, but bouncing into this overall area of resistance that we cracked yesterday to the downside. 468 up to 482 is going to be a challenging area for the bulls to get through. That being said, if you look at the retracement size, about 40% right now. If we lose this, and how do you know you lose this, guys? You lose the hourly uptrend. If you roll the hourly uptrend over, that is your daily bounce being finished. And with such a, medium or inadequate sized bounce, you would not be surprised if the bears capitalize, send us lower. And if that is the case, weekly downtrend simply continues and you're targeting 450 down to roughly 426. I'll give the bulls the benefit of the doubt because there's a lot of data on the table. I've said numerous times so far that because the fear and greed index is so low, everybody is so fearful, everybody's loaded up on puts, the VIX is high as well. Your percentage of stocks above their 20-day moving average is relatively low. Percentage of stocks above their 50 is even lower. And percentage of stocks above their 200 is also at lows. There could be an argument here to say that this event for the tariffs, if the tariff expectations come in line, which Wall Street is pricing in at a 25% clip, broad-based across everybody, that largely has been priced in, and you would not be surprised to see the contrarian sell the rumor, buy the news. That would not be surprising, but it's very tough to know that that's actually going to be the case, guys. I'm not going to be making bets either way. I would rather wait patiently on the sidelines, establish new levels, establish more macro clarity, and then we can take it from there. Moving into XLF financials right now, down about 0.12, but inside candle with yesterday's trade. We know the bulls are trying to go for the higher lows into higher highs. You need to crack 50.84 to set a new daily uptrend, and be sure that the bulls are actually going as well for a new weekly uptrend, which would be a very welcome thing. However, if you roll over and set the daily downtrend, I'll remind you we're going right back down here, 48.28, down about 46.63. That would be a very nice area. It's been support for the bulls for a very long time, the last 4 or 5 months. We will see if they can maintain that. But financials not looking all that bad. It's just that none of the banks or the credit cards are really in nice buy zones right now. Bank of America, I need lower. I need down here, right? 39 to 36. JP Morgan, I also need down here. We're kind of in no man's land right now. You don't know if the bulls are going to save this for an uptrend or if we're actually going for a further downtrend. So I need lower, and I would also appreciate daily oversold conditions too. Those are some of the big banks, right? Visa and MasterCard, we are still in no man's land, absolute no man's land. Support's all the way down here. So you take a long here, it's an equidistant risk to reward, not my style of trade. MasterCard as well, equidistant risk to reward. The highs, the lows, you don't know. Can the bulls complete the weekly uptrend conversion, or will we have to roll over and possibly find more support down there at the lower 500s? So I'm staying very patient on financials and very picky on which names I'm choosing to play. On to healthcare right now, the biggest loser of the day. Well, unfortunately, healthcare now, guys. Daily downtrend underway, rejection from resistance again, 149 roughly, down to about 146.5. And we were warning about this, yeah? It had all the markings of a daily downtrend rollover, a possible weekly trend rollover, and the infamous head and shoulders rollover as well. If the rollover, gains momentum to the downside, 140 down to 130 is your big area of support. It's a wide range, but that is the entire range from 2021, 2022. There could be some very interesting plays that show up if you are patient enough. But, if you've been in plays, like I was suggesting some longs on UNH from down here, those longs now need to be wound down. You're coming into resistance, 525, 550, 560. and a healthcare ETF overall that does show signs of possibly rolling over. So you may want to wind down some of the healthcare bets that have ran a lot. Johnson & Johnson was the same thing coming into the top end of a range. If you accumulated down here, well, now the profits were had. And unfortunately, today with the news, they got hit really, really, really hard. Moving on to SMH right now. SMH, a little bit of a recovery today, 0.5% to the upside. But who's in control right now? Well, daily uptrend attempt, equal highs, but unfortunately, that's not enough, right? Equal highs and low. That is a daily downtrend new for the bears. Under resistance, 216 to 232. You can clearly see on the weekly charts who is in control right now. Still, the weekly bears and a lot of resistance. So the bulls need to start everything from scratch. Give me a nice size bounce, convert into a daily uptrend, and then we could talk about whether or not we can turn this into a weekly uptrend. But there's a lot of work to be done by the bulls right now. Some names that are very interesting and interesting levels right now. ASML, guys. ASML came right down and touched its big area of support, 650 down to 571. TSM, also not a bad bet right now at the 150, lower 150 mark. Decent support area for this stock as well. Two stocks with phenomenal valuations. Even NVIDIA with a great valuation, but all of them share the same thing. They're all in weekly downtrends. So it's very tough to say this is the absolute bottom. Let me throw the full portfolio at them, right? But are they in good nibble buy zone territory? Absolutely, I do think so. So that is everything for semiconductors. A lot of work for that sector to do, but just understand the bears still retain control on most of all the major timeframes. We will see. Can they get a nice bounce and convert? Or will the bounce just be too weak and we just roll over? If we do roll over, guys, 200 is the next area of psychological support. Moving on to the Russell right now. The Russell's still struggling right now. Who is in control of this one? Well, you guessed it. It is the bears, right? Roll over the daily downtrend right now. The bears are looking for the lower high. If we lose the hourly time frame, and we were close, very close today to losing it. If you maintain it, no problem. The daily bounce continues. As soon as you lose this hourly time frame and set the lows, right? Break the lows of this afternoon into tomorrow, that's an hourly downtrend. It means your daily bounce is finished. And with such a very soft bounce on the daily, a 38.2% bounce, the bears have it in them to roll this one over and cut deeper into the support range, which ends at about 192. We're at the top end of it now, 200, but it ends at about 192. The weekly bears are still in full control. So the bulls really need to start everything from scratch. And that all starts with the daily uptrend recapture. We will take this one day at a time. And now lastly, the Dow Jones. The Dow Jones also, roughly flat today, but okay, who's in control of this chart right here? Well, unfortunately, it is, once again, the bears. They lost the daily uptrend by flushing these lows in the last 2 days of trading. Now, the bears are looking for the lower high into resistance, 42.5 down to roughly 41.9. Looking for the lower high. Will they get the rollover back into support? Well, we know that their weekly counterparts are definitely in control of this chart. Lower high is set. Will we roll over to the lower low? We'll have a look, but support below us, 41.2 down to 40,600 overall. We went through the monthly candle closes yesterday, and the Dow Jones looked the least bad out of all of them, but still in very heavy monthly consolidation. Very trendless right now in the Dow Jones. It's a constant battle between two very large areas. Where does a long come in? Glad you asked. A long would be a breakout retest into support. That's when you can afford to take a long. But right now, indeed, it is a short setup, right? You're looking at a back test into resistance. The bears are in control of the higher weekly time frame. This would be a short attempt, stop loss above there, take profit into here, but it's not the best short setup because, quite frankly, it's an equidistant setup, yeah? It's about a 1-to-1 risk to reward. Not my favorite setup. The range is too tight, and that's very big support down below us, but just keep all of that in mind. Moving on further down, our minor sectors were doing well, but the minor sectors, we don't cover them that often because they just don't move very fast, right? But XLP, not looking too bad. Higher lows are set, looking for the weekly uptrend continuation. Resistance always very clearly, 83 bucks. Utilities, same concept, trying to find an accumulation range above a very large area of support, 77 to 72. It's a sector that I wouldn't mind playing for a possible leg of expansion. Real estate as well, muted, same as utilities, into very large support. Would not mind playing this one as well for a little bit of a swing trade appreciation if yields possibly come down this year, which they will. And then energy, lastly, my favorite trade of the value defensive rotation overall, guys. Very, very, very easy trade to conceptualize. It's just because it's seasonally positive, yeah? Whether you look at the 28-year pattern, the 5-year pattern, the 15-year pattern, which have been through a number of different presidential administrations, a number of different geopolitical conflicts, and it's always the same. Oil is seasonally strong from February to July as people travel more, both by air, both by car, and you have the agriculture season starting, which uses a lot of oil in the northern hemisphere, at least the part of the world that has, winters, right? That whole winter to summer seasonality there. That's everything for all your sector recaps. Hopefully you enjoyed that. The VIX still just chilling, right? We don't know. Can we get a big pop on the VIX into those Trump tariffs on the Thursday session? Perhaps, but we know when the VIX is high, it's probably time to buy, right? Especially when people are very fearful. I wouldn't mind making a short attempt on the VIX at about the 28 to 30 level if we get back up there. But from here, guys, it's a gamble, right? You can try to make a play, but the play long on the VIX was all the way down there. Now you're kind of in an in-between area, so it's quite challenging still. Moving on to yields right now. Yields again tumbling, guys, as the constant narrative on yields is inflation, keeping rates high, versus recession, which would trigger the Fed to cut the rates more rapidly. It's a battle of narratives in the yields market right now, but the technicals do paint a very clean picture, right? Uptrend, engulfing move, lower high, and now almost fracturing for the lower low, head and shoulders pattern. We will see if yields follow the prophecy down. 20-year yields, the exact same analysis here. Head and shoulders chart, the higher lows are set. Looking for some possible follow through, which means that the TLT bonds may, keyword, just be coming alive. It's a beautiful setup, guys. A very beautiful setup for a long on those TLT bonds. I'm in this trade myself, but you got to be very patient because sometimes it's a very slow trade. And lastly, moving on to gold. Well, gold, guys, pulling back from the highs. I was telling everybody, right? Be very patient. It's not a good proposition to be buying gold overbought conditions into, brand new highs after like a massive 3-4 day rally. Probably not a good proposition. You'd rather wait for a retest of the 12 EMA. Always use the short-term timeframes as your guide. If you're looking for the topping out of a daily move, look at the hourly time frame. And I haven't talked about this in a while because we haven't been in uptrends on a lot of assets for a while. 12 EMA is the hourly guide. You lose the 12 and you lose the hourly uptrend into a downtrend. You know that most likely that is the end of the move and you're going into daily consolidation. So where could we head down on daily consolidation for gold? Probably this area of confluence right there. Prior highs, 3,050, confluence with the 12 EMA, which gold has largely been riding a lot this entire rally that they've had since the month of January. That would be the next entry location for some possible swing trade longs. But up here, it's a little bit dicey buying things after they've ran that much. Now, moving into Bitcoin, Bitcoin was actually up 3.4% today. So not that bad of a day for Bitcoin at all. But who's in control right here? Still the bears, sadly, even after this nice one-day rally. You had the uptrend, you flushed these lows, you rolled it over. Now the bears are looking for a lower high coming into the 200-day EMA right now, 85,600. And above us, unfortunately, big resistance, guys, 87,000 up to roughly 92,005. It's been an area that's been very challenging, well, both as support initially and now as resistance, right? Who's in control? Still the bears, guys. So these setups are still, technically speaking, for shorts. We will see. Can the bulls engulf and change the trend and get back this zone? Well, that would be one thing we'd be looking for there. But right now, the shorts are indeed still on play. You can keep it very tight stop loss, right? Technically speaking, if you're trying to trade the weekly shorts, the short would be going above, or the stop on the short would be going above the most recent weekly high, which is about 88,700. And you'd be looking for possible downside follow through. The only problem is you have the most volatile day of the entire month of April coming up tomorrow after 4 p.m. Now, moving into big tech names. So big tech, I spent a lot of time with my Discord members today on big tech because I did not want anybody to feel FOMO, guys. You have to understand that all of these big tech names, for the most part, the control is still to the weekly bears. So after 2 nice days of bounce on big tech, well, there's 2 different types of people. The long-term portfolio investors that right now is a decent DCA opportunity across a number of these names, but small nibbles, as I was talking about in yesterday's video. But for swing trade longs, you really have to take a thesis that Thursday is going to be a bullish day after tariffs. And if not, you have to trade with a very tight stop loss, right? Moving on in. Apple trying to go for the daily uptrend continuation and break above the 200-day EMA. 225 is the 200-day EMA. haven't been able to crack it in the last 6 days of trade. We will see. The higher lows are right below us at the low of yesterday, 216.27. Break those to the downside, daily downtrend resumes, and the bears resume their control of this massive weekly downtrend right there. So we will see a very large catalyst on the table for Apple on the rest of the week, right? With the tariff day, of course. Apple, though, right now, not my favorite for some swing trades, nor either for some valuation, right? A very high valuation Apple trades at right now, and lackluster revenue. We've been talking about this factor on the channel now for the last 6 months. That's what's really been holding Apple back from big all-time high expansion. As a matter of fact, you can see they tested it a few times, but have we really had the same rallies that you can see Apple have sometimes? I mean, not really, right? This was the last big leg. It's been really choppy. Then we got the election leg, which the entire market got. But since then, it's been relatively kind of sidelined, yeah? Moving on to AMD right now. AMD up a decent amount today, 0.04%, excuse me. Very decent amount, right? AMD will take any green day that the market will give it. That being said, who's in control right now? It was a daily uptrend. The higher lows were set right there, 103.30. Unfortunately, you flushed it. Now the bears are looking for the reversal pattern, lower high into lower low. We will keep an eye on how high this bounce can actually get. But long-term, guys, AMD still has a great valuation down here. So if you're a long-term investor and you agree with the AMD thesis, which would be expansion of their EPS and expansion of their revenue over time, you can see coming into that data center build right now, and the revenue as well coming into that data center build, the analyst price targets are all, for the most part, very bullish and largely above the current price. And this is a good area of support, which ends at about the $98 range. They had a beautiful weekly bounce underway. They almost gave it all back. The higher lows are trying to be set, but this is a big retracement, guys, right? We will see. Can they do it? It all depends on the direction of the overall market. Trust me, if the SPY and QQQ end the week red, AMD is probably not going to be green. But I like nibbling on this one, guys, for the long term. Swing trades, unfortunately, guys, you kind of have to wait, right? Or if you're taking them now, trade with the stop loss. The stop loss has to go below the lows of a few weeks ago, and then you would be targeting the local highs and the 200-day EMA 115. That is not a bad risk to reward, all things considered. If that is your stop loss, let me just adjust it right here. If that is your stop loss, and that's your take profit right above there, guys, it's like a 1.7, almost a 2-to-1 risk to reward. Not bad, but you do have to trade with a very tight stop because tariffs will bring in that volatility. Moving into Amazon right now, same concept. For a long-term portfolio, fantastic area to buy. Sure, you're not buying the lows of yesterday, but who cares? If you have a 5 to 10 year time horizon for your Amazon, at that point in the next 5-10 years, right, Amazon's probably going to be up here. What do you care if you buy it at 192 or you buy it at 187? It won't matter, guys. It's an incremental difference, right? As long as you understand you're buying a fantastic company with great valuations right now, 20+% off its all-time highs. That being said, if you're swing trading here, you have to understand the timeframes of control. Daily uptrend is lost, engulfed. Now the bulls have to start everything from scratch, and 2 days of bounce is not going to be enough. The bounce size right now, respectable 38.2%, but you need to get a lot higher, guys. Number one, we need to clear this support zone, 191 to 180. Give me a good bounce, then we can talk about a daily uptrend, and then we can talk about the bull's capacity to recapture the longer duration weeklies and start putting a little bit of action in on this monthly. The monthlies were looking good, as I said yesterday, yeah? Just looking for monthly higher lows for further trend continuation and into support. So decent area to be basing some swing trades off of. But if you're trying to go long here in the face of brutal uncertainty for the rest of the week, we have to be trading with a stop below 185, guys. There's no other choice. Stop goes down below there, and the take profit is right up here. I love Amazon, though, guys, at this price. Fantastic price, decent forward price to earnings growth ratio, and decent forward price to earnings as well. Tremendous free cash flow, nice margin expansion. Amazon is now focusing on shareholder returns, which they've never done before, truly, in the company's history. They've always just been a growth company at all costs, and now they're really focusing on those margins. Nice pivot there by Andy Jassy, the CEO, about 2-3 quarters ago at this point in time. Moving on to Google. So Google as well, same concept. Nice day of bounce on Google, 1.7%, but who is still in control? Well, you had arguably the daily uptrend, same as Amazon. Big flush. Now the bulls need to start everything from scratch. They did bounce from a nice support zone, 153 to about 140. That's a big zone, guys. It's the 2021 all-time highs. Acted as support after the Japanese carry trade unwind. It was resistance for the markets for a while. You can clearly tell that this is a very, very large and important level, right? So if we're trying to see the bulls can recapture, give me a better bounce than this, guys. And then we could talk about the daily uptrend. Above resistance stays put 163 to 174. If you are trying to make an attempt on this one for a swing trade, counter trend, because it is counter trend, it's a weekly downtrend and a daily downtrend. You're trying to pick these lows and saying, you know what, I'm going bullish into tariffs. The take profit is here. The stop loss has to go down below 152. But Google, fantastic, fantastic valuation right now for a long-term portfolio nibble if you're a fan of this legacy company, right? Very, very, very cheap right now is Google. Almost an 18 forward price to earnings and a 1.16 peg. Moving on to Meta right now. So Meta also benefiting from a nice day of rally, 1.67, but same as the other charts, yeah? Meta does not control the trends right now. This was a daily uptrend attempt, right? It was a big daily downtrend this entire time. The most recent leg is here. They engulfed it, and unfortunately, they rolled over. So we are closing above the 200-day EMA. We never lost support, which is 600 down to 560, which is all these friends from back here. That being said, size of the bounce right now, a respectable bounce, same as the rest of the market, 0.382. But that does not guarantee anything, especially when the weekly bears have engulfed the entire time frame and set the weekly downtrend in motion as well. We'll take this one day at a time. Meta, great company, guys, for a long-term portfolio. The valuation right now is a little bit rich, I will admit, a little bit rich on forward PEG ratio. You know, objectively speaking, on a forward price to earnings only, it's not cheap, but they're not growing EPS. A lot of this EPS growth is in the front years, which is why your EPS looks fantastic for a next year basis, right? But then after the expansion, you know, kind of just normalizes, right? From 24 to 25 and then onwards. But beautiful company, nothing bad to say. Phenomenal, phenomenal net margins, phenomenal free cash flow, huge, huge, huge buybacks for this company. I think Meta is positioned to be very good in the next 2, 3, 5 years. No problem at all. But if we're swing trading here into tariffs, very simple, guys. If you're going for a long, it's counter trend across all time frames. You'd be looking for take profits here. Stop loss has to go below 553.59. Moving on to Meta, our Microsoft right now. Microsoft, same concept. All these charts look exactly the same when we're talking about big tech, yeah? Daily uptrend was confirmed by the bulls. Rejection at resistance, which was 408, 410, down to roughly 395. Got rejected, engulfing move. Now the bulls have to start everything from scratch. Bouncing out of support, 378 down to 364. Keep in mind that is all these guys from down here. If you were to lose this, you're coming right down to 346 to 323. Overall, that's kind of like this $20 range right there. And also the previous 2021 highs of the market. That being said, the bulls need to start everything from scratch. If you're thinking of longs here, counter trend longs, right? Because they're not setups for longs. Technically, they're setups for shorts. But if you somehow want to go long into tariffs, stop goes there, take profit goes above here, 396. Keep that in mind. Microsoft, I mean, Microsoft is Microsoft at the end of the day, guys, right? I mean, I could talk to you about the fundamentals of this one for an hour and why they're so great. But number one, it's their balance sheet. It's their cloud growth. Their revenue and EPS growth are fantastic. Their free cash flow yield is always, well, their free cash flow yield is low, but the free cash flow they bring in is fantastic. Net margins are amazing. And it's just the consistency and how predictable Microsoft is in any market. The EPS is steadily maintained up and to the right, and the revenue as well is steadily maintained up and to the right. Moving on to Netflix right now. So Netflix as well, guys, is a battle, right? They now lost the daily uptrend by flushing these lows of 918 in the last few days. We have now fully engulfed, and now you might just be looking at the bears trying to set a lower high into lower low. That being said, we are still barely holding support right now, 935 down to roughly 900. So it's kind of very mixed, right? The higher time frames are telling you, yes, the bulls are still in control of the weekly, but you would not be surprised if this either devolves into a tightening range. Worst case scenario, if all the markets pull back, we are probably heading lower on Netflix. That would be somewhat of a nasty head and shoulders pattern formation. So no trades from me on Netflix right now. It's just too choppy. There's a lot of time frames doing battles here. In terms of fundamentally, though, for a long-term portfolio, yeah, I mean, at 930, the valuation is not terrible. I didn't say good. I said it's not terrible. Forward price to earnings is 38.3. Free cash flow yield is a little bit low. So, of course, we're not getting the best possible price. But if the goal here is to DCA on Netflix through a possible correction, we want to nibble a tiny bit here and then move down with the stock because we don't know how low it's going to go or if it's going to go down at all. So if we want to get something in terms of a next 5 to 10 year play, it's not terrible, guys, but you got to go light initially and then build the size as it drops. The actual best valuation for Netflix, guys, in my opinion, is 700. I'm not saying it's going to get to 700. I'm just saying that relatively speaking, that's probably where fair value kind of sits a bit more. But I mean, who can argue with their last Q4? Fantastic metrics across the board. We even covered it on the channel. Moving on to NVIDIA right now. NVIDIA also trying for its own little bounce, 1.63% to the upside, back above 110. Not too bad, but who's in control here? Still the daily bears, right? They tried for the daily uptrend, couldn't get it done. Equal highs, right? Double top, and then the rollover. Now the bulls need to start everything from scratch. Starting from a nice point, though, 111 down to 102 is that big support range. Let's call it psychological 100 because that's where we bounced a couple times. The weekly bears, though, still in control, right? So the weekly bears, maybe just looking for a lower high into lower low. We will see. First things first, give me the daily uptrend. Then I can make that evaluation of whether or not I want to play it. If you're looking to play NVIDIA into tariffs, going for a recapture of those levels or a V shape, right? Stop has to go below 103, which is the lows, right? And then the top end of the take profit would be around 120, 122. Not that bad risk of reward setup on NVIDIA right now if you're swing trading, yeah? It's roughly almost a 1.7 risk to reward. That's not terrible, all things considered. And long-term valuation on NVIDIA, guys, well, the valuation is good, right? It's currently sitting at about a 1.1 peg. Forward price to earnings is relatively cheap as well. The growth is still good. I'll remind you, though, the demand for NVIDIA is incredibly high for the next year. However, thereafter is everybody's concerns. Will demand stay as high as it has been? And can they protect their margins as well as they have been so far? Now, you'll see EPS is increasing, but at a decreasing rate. Revenue is increasing, but at a decreasing growth rate. That is the concern for NVIDIA right now. Nobody's saying they're not a fantastic company. People are just trying to price in what is their terminal rate of growth after they blew past everyone's expectation. Now that EPS is normalizing, now that revenue is normalizing but still going up, what is going to be the terminal growth rate for this company? Because it does make an impact when you're running valuation models. Moving on to Tesla right now. Tesla up 3.6% overall. Not a terrible day for Tesla, right? But an inside candle for the most part. Inside resistance. 300 down to about 260 is this big resistance area. And you got to be careful here on Tesla, right? They're going to release their deliveries probably shortly, very shortly. Oh, they just did it. My bad. Give me a second here. I'll be back in 10 seconds and I'll give you guys the news. Sorry guys, they come out later. I was trying to do some magic of the internet and read the article and pause my video and then resume. But unfortunately, that was not the case. We do not have the delivery numbers just yet. Those come out tonight at a certain point, probably later on in the evening. But we had this little article here that I was reading today. BYD will beat Tesla 2 ways this quarter. They reported very solid deliveries, 371,000 passenger vehicles in March, including 166,000 EVs. Total passenger vehicle sales rose 23% year over year. Battery electric vehicles sales grew 19%. Total sales topped 1 million. Unfortunately, that will be enough to top Tesla yet again. Elon Musk's company is expected to deliver 378,000 EVs, down about 2% year over year. It'll be the third quarter overall and the second consecutive quarter in which BYD has topped Tesla EV sales. Now, you may be able to see some of the headlines here. If I pull up the news on Tesla, right? You'll see all on the right-hand side. Tesla faces European sales slide as Lucid lures away its drivers. We know, right? Tesla sales tumbled 37% in France. They're down across Asia. They're down across Europe. Now, some of this is due to the Model Y refresh cycle overall, which is currently still the best-selling EV across the planet. But that being said, guys, we will see what the delivery numbers have in store for us today and the reasons. How much of that is attributable to the Model Y refresh? And how much is it due to actual reductions in sales volumes across the board that have nothing to do with that refresh, right? A lot of investors are trying to justify away these sales declines through the Model Y refresh, but it's not all that, right? We have to put on our thinking hats here and say there are definitely other things at play in order right now. That being said, daily uptrend is trying to be maintained. We'll see if they can do it. But if you roll over and flush this low, 242, that is a new daily downtrend, and unfortunately the start of another new leg of weekly downtrending action, getting rejected into resistance right now. Support stays below 220 down at 190 roughly. I will not be playing Tesla, guys, into the tariff news most likely. I'd be more keen on seeing if it does pull back, how does it react to the support zone? Because I mean, right now, what you're trying to go for here is an equidistant risk to reward. If you buy here, right? Well, the take profit, excuse me, is there, and the buy and the the short sell take profit is down there as well. Or if you buy up here, sorry, if you buy up here, I'm getting confused by these, trying to read headlines at the same time. If you buy here, the take profit is here, the stop loss is all the way down there. If you short here, the stop loss is up here and the take profit is down there. It's equidistant in both directions, right? We need a little bit more either way. Moving on to Palantir. So good old Palantir not performing too poorly today, but we know that the price action is largely similar to the rest of the stocks that we've been looking at. Nice daily uptrend. Unfortunately, was lost yesterday with the flush of the 82.17 lows. Still reacting, though, from this support zone, 83.50 down to 77.51. We will see. Are the bears looking for the lower high into lower low? If that's the case, a few things will be done, guys. Not only daily downtrend into the next level, 72 down to 64, but it'll also be the first weekly downtrend on Palantir in a very long time. The bulls are still trying to protect and reset into a new weekly uptrend. I was saying how hard it is for the bulls to just V-shape and continue this like this. If anything, the best chance they have is a two-step recovery process. And that might be what we're looking for, but be careful on the lows here, 74.50 overall. Same thing with Palantir, guys. If you're going for a long here, swing trade into tariffs, the take profit is here, 97.80. The stop loss, likely would probably be below 75. So it's not quite a 2-to-1 risk to reward overall, unless you use the lows of yesterday. But I'd be keen on using these lows down there. If you use the lows of yesterday, then sure, it becomes a 2-to-1 risk to reward trade. If you use the lows at 75, it becomes more like a 1.3, arguably a 1.3 risk to reward. So not the most fantastic. But then again, maybe you can argue, well, what if I only take profit a bit here and hold the rest of the highs? Sure, but still, objectively speaking, right, it's very, very tight in terms of that range. Moving on to SOFI right now. SOFI up 2.41%. Same as the rest, though. Daily uptrend was lost yesterday. The lows were flushed, 11.79. Now we got to get everything back. It's nice, though, that we're finding bottom line support down here, 11.70 down to about 9.50. This has been a big area for SOFI in the past. A lot of resistance here, and also it is the IPO price as well, around that $10 mark when it's SPAC'd. I think SoFi's name was IPOB when it came out, or was it IPOA? I don't know. It was one of the IPOs from Chamath, right? So back way back then in that market. Now moving on, you'd need to see a bull, nice engulfing move. The bounce right now is okay, but nothing to scream home about, right? 38.2% bounce right under the 200-day EMA at 12.07. Need to see a bigger bounce than that if you want to recapture and give the bulls a chance at trying to tackle this big weekly downtrend, right? Because now it's still a weekly downtrend. So I'm a big fan of buying SOFI down here. In terms of swing trades, same concept. If you're buying long here into tariffs, well, the stop has to go below the low and you're targeting the highs. But all of these longs, guys, are counter trend, right? The bears are still in control. The valuation of SOFI at 13 bucks was very good. So you would assume that at 12 bucks, it's even better. I'm a big fan, guys. 11 down to 950. Decent range of accumulation if you are a long-term SOFI shareholder. Now, before last, Uber up 0.18% today. Started off red. The last 2 days, Uber started off bright red, but the 200 EMA acting as a bit of defense, and this whole range of support too, 73.30 down to 68.76. It's been a big area of congestion for Uber, support, resistance, resistance, you can clearly see it's a very, very congested area overall, and the bulls are still trying to look for that future weekly expansion, just tightening up of the range over here. Not too bad, and this was one of my favorite plays for some short puts. It offered opportunities twice this week below this expected move of 69.82. The 68s, the 67s were open a lot yesterday and today. It was also on my top 5 options playlist, so hopefully a few of you were able to squeeze out those trades if you're looking to sell puts on Uber down there and either be happy of owning the shares or just now pocketing the premium, which is the goal, right? So Uber not looking too bad. And in terms of fundamentals to acquire this for a long term, even here at 72, guys, it's not that bad at all. As a matter of fact, it's very good. A 1 peg on a forward basis and beautiful free cash flow yield. And now lastly, Taiwan Semiconductors. So TSM, same concept as the rest of the names we just saw. Who's in control? The bears, right? Daily uptrend was washed away by flushing these lows, 170.61, this guy right here. And now we're looking for a bit of a bounce into support. 171 down to 156 is the culmination of that very, very large support zone. And now we need to get a good bounce going. A good bounce so far. It is negligible, right? 38.2 as well as the rest of the market. So the bears have all the capacity in the world to use these guys as resistance, shut them down, and then it's up to the bulls to protect these lows with their lies. If they don't, you're going for one more leg of weekly selling. We covered the weeklies and the monthlies yesterday, guys. Shouldn't be any surprise, right? The weekly bulls are in control of all these time frames. Step number one, give me a new daily uptrend. Step number two, how much of this weekly high can we recapture to maybe reset the weekly uptrend and put an end to this brutal 3 months of consolidation. But TSM objectively is not looking terrible, guys. Overall speaking, right? At 170, and now we're below that, right? Well, we're roughly at that. At 170, the valuation is very cheap. Forward price to earnings, 18.6. Now, a 1.09 peg and a very decent free cash flow yield for this phenomenal company overall. Fantastic net margins, very large competitive advantage, right? Barriers to entry are very high. You want to compete with TSM? At this point, good luck. You know what I mean? They are who they are for a reason, and the stock is overall very an adequate price. Let's just call it that. If you have a 5 to 10 year time horizon and you're not worried about picking the bottom, you'll just DCA with every paycheck, regardless how low it goes. It's starting to be really attractive in terms of valuation right now. But swing trades, understand who's in control. It is still the bears, right? Until we get some uptrends, it's still the bears. You have to be very patient and very particular with your swing trade longs. Even though if you want to take longs into tariffs, keep in mind, right, your stop loss is below this low, 160, and your take profit is the most recent highs. It's about a 1.5 risk to reward overall. So that is the rundown of the overall market. If you want me to give you a few of the swing trades that I've been eyeing this week overall, I gave you a lot of them on the Sunday top 5 options video towards the end, some of the bonus plays. But the ones I'm looking for more specifically, very easy, guys. ConocoPhillips, I think this is one that's lagging across the whole oil sector. CVX, already gone. ExxonMobil, already gone. COP, little bit of a catch-up trade from here all the way up to resistance 112, 115. Highly possible it's now the top holding in the Schwab dividend fund. So I've been a big fan of, members who are looking for some short put plays on oil companies. Down here was not too poor of an idea into the start of this week. And now even for some shares for continuation, not that bad for some longs. CP as well. I've been in this one myself. CP, Canadian Pacific, into what? 3 years of support at this point, 72 down to 66. Very juicy area. If you do like CP as a company, you're looking to pick some up, or you want to take a bit of a swing trade, right? There's lows, go below the lows, right, that we just had right down there, looking for the lows of support to be maintained. And then if you're patient enough, you can target the range highs all the way up here at about $78 to $79. Fantastic company. The other one I've been really bringing up often on the channel, Lockheed Martin, guys. Lockheed Martin. Look at the monthly chart. Look at the monthly chart. Yeah, nice monthly upturn right now within the channel into support as well. President Trump today said that he was going to, remove some regulations on weapons exports. That was supposed to help companies like Lockheed Martin, companies like Raytheon, companies like General Dynamics a little bit, and they responded well. Lockheed Martin still trailing a little bit behind, but with the first time we brought this up, guys, I mean, we were buying down here, yeah? You're not really late if you have a long enough time horizon. The stop goes below here, and you're targeting either take profit number one or just cutting some here and then maintaining possibly for the long term, but phenomenal company, phenomenal entry as well. And the last one, a bit of a new one here, stemming from my previous swing trades in the whole investment managers slash financial data trades. I was talking to you guys about SPGI, right? A lot down there. It's now since ran. I was talking to you a lot about Moody's Corporation down here. It's now ran. They're still at good levels, but they've ran a little bit since then. FICO, not that bad as well, looking pretty good. I was telling you guys about it a lot at the lows. It's starting keyword to come alive a little bit. The other one as well I was bringing up was Brookfield. Brookfield at the lows was fantastic. Another double dip opportunity on Brookfield. What were we looking for? All these charts look the same, guys. Monthly higher lows into 2021 highs for some possible expansion. The next edition of the whole, investment manager trade is Blackstone. Blackstone is a company that maybe many of you know, many of you don't possibly. It is an investment manager corporation. They do a ton of deals, guys. M&A deals, hedge fund management, real estate deals, creative real estate deals, development deals, just investments overall. And they have a whole investment portfolio that they manage as well, right? So a lot of creative financing, but they do really, really well, guys. They pay a dividend as well, 2.83%. And they also have very good margins when times are good too, like this, like they are right now. Monthly uptrend, looking for higher lows into 2021 highs. 26 EMA, which comes back often when this company tends to correct to the downside. Can it drop lower? Yeah, but I'm a fan also of possibly taking this swing trade right here pretty much. Their headline today was negotiating to buy a minority stake in TikTok's U.S. operation, potentially joining other non-Chinese investors like Susquehanna and General Atlantic. So could be very decent there, guys. You're looking at bullish divergence, right? Lower lows on the price, higher highs on the RSI. Not looking too bad. We're not quite daily oversold, but we were. And now with that divergence into support, which is 141 to about 130, not that bad, right? The weekly legs down are getting smaller and smaller here. Could we maybe be looking for a little bit of upside? Sure. And I wouldn't be opposed to even building a position on this here, right down through roughly the lower 120 range, which would be just at the bottoms of this range right there. So Blackstone, possibly a decent play as well. Notice that all of those plays were all value plays. I mean, I brought on a ton of value plays for you guys, right? I mean, we clipped Pepsi pretty much at the lows. That was a very decent trade as well. There's a few others that we talked about in Sunday's video as well. Even China, if we're waiting patiently for China, a K-Web comes back here, 32 to 31. Not that bad of a deal. I mean, you guys for now know my stance on big tech. I'm pretty bullish on big tech, but patiently and respect your levels, yeah? I'm just trying to bring you other different plays from other different industries that maybe you guys don't have a look at that often, but could be interesting as some form of hedging against those big tech positions if you're already a bit tech heavy, right? Those are just a few swing trades. I'll try to bring up, well, either the same ones or new ones, every other video just to keep things interesting. But that was it for today's video. Hopefully you guys enjoyed it. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. If we do these videos every Monday through Friday after the close. So I hope to see you guys back in another video like this. And lastly, if you have any questions, guys, I'll be answering all questions tonight. If you have any questions on stocks, options, macro, tariffs, and anything in between, what's my favorite color? Feel free to ask down below in the comment section. I'm always very happy to answer you guys overall. And lastly, if you want to trade with me in real time live and with over another 150, almost 200 other members, guys, that trade similar strategies, option strategies, writing a lot of options like the wheel strategy, put credit spreads or small call debit spreads, leap call contracts, share swing trades, long-term portfolio construction and building as well. If that sounds something that if that sounds good to you, well, here are all the trades since the inception of the Discord. Now, of course, none of these trades are financial advice. They're just, of course, my own trades for example purposes, let's just call them, right? Now, these all green check marks are the wins. The red little circles are the losses. Always very transparent on the channel for the last 2 years, right? About my wins and my losses. So these are all the trades from the Discord. They are all posted live in real time. We also do private morning live streams Monday through Friday for about 2 hours after the bell where I trade live and take all your questions on your stocks, your options, and anything in between. If you can't attend, they are always recorded and you can ask me all your questions in our chat rooms and I'm usually very fast to answer all throughout the day. We also have private videos in which I go over advanced strategies that I don't talk about so much on the channel, how to grow an account from small to large, different strategies depending in my opinion, that I use depending on my account sizes and how to grow them up, long-term portfolio construction, technical analysis, and so many other things in those private videos. A lot of members have been finding tremendous value in those. And you also get access to all my watch lists. Yeah, all my watch lists, the different watch lists, all my technical analysis. You just literally copy paste 3 buttons. You get all the charts, all the watch lists. And whenever I do annotations like earnings, like all these fundamentals right here, you get those too. So that's also an added benefit to the Discord. If any of that sounds good to you guys, the link is always down below in the description. Hopefully see you in there soon. And if not, I guess I'll see you back on the channel, guys. So take care. That's it for me. Have a great rest of your evening and get some rest tonight, guys, because tomorrow is probably going to be the biggest day of the month. Yeah. And we will recap it all after it happens on the channel. So see you soon. Take care. That's it for me.